23rd Annual EIC Energy Infrastructure Conference is underway in Aventura, Florida. And joining me now is Aman Mittal. He is the Managing Director and Head of Data Centers for Moelis & Co. Aman, welcome.
Thank you, Ashley. Great to be here.
What solution is Moelis & Co. providing?
So we are an independent bank. We provide advisory capacities for everything from M&A, so mergers and acquisitions, transactions on sale, capital raises, capital structuring solutions. So think about any financial, big strategic decision making that a company has to do and they need an advisor for it. That's where we are.
And I understand you primarily focus on data centers, which is why you're at EIC. What is the value of being here today?
No, absolutely. I cover data centers and emerging telecom. So think about digital infrastructure. And I've been covering this for more than a decade now, but it has increasingly got connected to adjacencies such as energy, power, real estate, and land, as data center has taken a lot of capacity from power sources. I believe it speaks for at least 5% of the capacity today in US and is expected to speak for around 10% of the total capacity from the grid by 2030. So that means you need to find smart, new age energy solutions and power solutions to be able to power these data centers, which need a lot of capacity. And that's where it makes a lot of sense for data center teams and data center advisors to be talking to energy companies and vice versa.
When you say you've been in this area for a decade, did data centers exist 10 years ago?
Oh yeah, yeah. I mean, it's for many who have recently joined in this very fastly evolving story. Data centers have been around. Like I have been around covering myself for 10 years, but this space has been around for more than 2 decades. Equinix, Digital Realty, and the likes of them, which are public companies today, $75, $80 billion plus companies, they have all been, they IPO'd back in early 2010s, right? And then there have been different waves of data centers. The first data centers was just enterprises deciding to use the capacity for storage compute for their own needs. And that was smaller, 2 megawatts, 4 megawatt data centers. Then came cloud. And as people adopted cloud, we became 10, 15, 20 megawatt situations. That's what the term hyperscalers used to mean, cloud companies using the capacity. That was, I would say, the next wave of 2018 to 2021 or so. And then 22 December onwards, basically, since ChatGPT came, is the next wave, which is the AI use case for training and inference. That has been the third wave. But across all three of these, data centers have been good, high, multiple industry with a lot of focus, given the customer set that is, Fortune 100 companies.
So in terms of the buckets of data centers between cloud and AI, are you seeing more demand in the AI bucket?
Today, yes. As of this moment, over the last couple of years, I would say the cloud demand has persisted in good 15, 20, 25% plus zone for a while. But AI demand, one, it didn't exist 3 years back, and right now speaks for a good 70, 75% of the total data center capacity needs in US or globally right now. Within AI also, there's a differentiation between what is being used for training and what's being used for inference. But cloud persists, and I believe as the training gets to artificial general intelligence, it will go back to inference and cloud users more. So it moved from 0 of AI and 100 of cloud to more like 75 AI and 25 cloud, but it may become 50-50 eventually.
So when we met, you said I'm a data center banker.
Yeah.
So what are you doing day to day? And then what is your position in the data center ecosystem? What function are you serving?
Right. So think about it this way. My function is more driven by what the companies need and what companies need in financial aspect, right? So right now, most of my clients are data center infrastructure companies, either sponsors who are trying to put capital to work towards data centers, or data center companies which are trying to build out the capacity based on their customer demand, and that needs capital. So I help them raise capital to be able to both equity, debt, and a structured capital if needed, to be able to, one, develop these data centers. Then how do you go from there and become a platform? And then those platform needs monetization, because most of this investment is done out of closed-end funds. So investor puts the money, and then in somewhere from 5 to 10 year period, they need to get their money back with the returns, hopefully. And that means monetization, which means sale, minority stake sale, full sale of the company, whichever be the cases. And I'm involved with any and all of them. That includes us, for example, helping Apollo buy Stream data centers in Texas, or helping 5C Group raise capital from Brookfield, or Prime from Snowhawk Naveen, and many other situations. The idea is we like to stick with our clients as friends and partners throughout their life cycle, where they start as raising capital for their initial investments or initial build-outs, then making a platform, and then eventually monetizing it for a good, successful exit for everyone.
So what do you think the next phase of data centers will be? Will we see quantum data centers? I don't even know if that is possible.
Yeah, I've heard enough about space data centers, and you may not believe this, but back in 2018, there used to be someone who tried data centers below water, right, and sea. So yes, I think the next phase, I can talk about from capital perspective or from financial perspective, is there will be a lot of data centers that will be built out. These will be large capacities with 15-year contracts. And the next phase will be, how do you monetize them? How does the investors get their exit? And who's going to hold those assets? These are 15-year, 20-year, 25-year assets. Who holds them? So what we call as stabilized data centers and sale of stabilized data centers to more real estate investors or more long-term infra investors or pension funds or sovereign wealth funds. That's the next iteration of monetization from the capital perspective, while we will continue on the track of these newer companies coming up, trying to build capacity where it exists. The last piece, I also do think that you have seen the CoreWeaves and the Cruises of the world, which is the compute layer and the data centers. And I think there is some vertical integration that may happen with these coming together.
Given the speed that AI is moving and the speed that these data centers are being built, what is your take on that?
So first of all, I believe most new age developments happen at a very, very fast pace. You can look back in cloud adoption, or you can look back when the internet was being put together. The initial phase of a new development, because there's a lot to do in a very short time, and there is essentially everyone trying to be having the first mover advantage, right, by trying to build most. It persists, and then happens some level of what I call rationalization phase, which is when people realize, okay, is this something that we need as much? And do we need it, all of it? And do we need all of it now? Or does it need to be a bit more staggered? But the general curve in any situations or any industries across, obviously data centers, digital infrastructure world, but also overarchingly, is that it goes up and then you digest a bit, and then it finds its next course, and then it digests, and then you figure out equilibrium, a path where it is beneficial for everyone. It works in the right manner. You get to have the communities being happy, you have to have investors happy, you have to have operators happy, and the customers served.
All right, Aman Mittal, Managing Director and Head of Data Centers at Moelis & Co. Thank you for joining us at EIC.
Thank you.